Okay, let's unpack this. We're diving into the Q3 2025 results for Firefly Aerospace. And if you followed the market after the closing bell, you know this was an absolutely pivotal call. The market was sort of holding its breath, and the reaction, that huge relief rally, was immediate.
That's the critical piece of context right off the bat. This was an after-hours announcement, and the stock just, boom, rockets up 18, 19%.
Wow.
And in this world of high-growth, high-risk space companies, that kind of spike, it doesn't just happen because of a small beat. It signals a real fundamental shift in how investors are thinking about the strategy and, more importantly, the risk.
So that's our goal today. We need to synthesize the cold, hard numbers with the ambitious narrative that management laid out. We've got to figure out what combination of successes and, de-risking convince the street that this company, which is, let's be honest, still in a hyper-investment cash burning phase, is suddenly worth so much more.
Exactly. We're going beyond just that top-line revenue number to really understand the strategic direction, especially as it cements its place in the defense sector. The market is clearly betting on that future growth and on that $1.3 billion backlog.
Okay, so let's start with the financials. They were good, but maybe not 19% rally good on their own. Q3 revenue came in at $30.8 million.
Right. And that's an 11% beat over what the street was looking for, which was somewhere around 28 million.
But the velocity is what matters, right?
That's the key. What's more important than the beat is the growth. I mean, we're talking sequential growth of 98%.
That's double the last quarter.
And 38% year over year. For investors in this sector, top-line growth is oxygen. And nearly doubling revenue in a single quarter is a powerful, powerful sign that programs are maturing and they're finally converting that backlog.
And on a pro forma basis, the loss per share looked pretty good too. A non-GAAP loss of 33 cents, which handily beat the consensus of around a 42-cent loss.
Yeah, that gave it that immediate positive momentum.
But the real confidence booster, the thing that I think really lit the fuse, was the forward look. Management raised its full year 2025 revenue guidance to a range of 150 to 158 million.
That guidance lift is enormous. It just blows past their old guidance and what the street was expecting, which was, around 135.5 million?
Yeah.
So when a company that's still trying to establish its flight heritage raises the goalpost by over $20 million, it tells you a lot about their sales pipeline and their confidence in actually delivering.
I get the enthusiasm for the revenue and the guidance, I do. But we have to provide some balance here. The GAAP net loss was substantial. It came in at $1.50 per share. That was a big miss.
It was a miss, yeah.
So what caused that huge difference between the GAAP and the non-GAAP numbers?
That's a crucial point. That GAAP loss was really driven by some significant one-time charges. The biggest piece was something called the change in warrant liability. Now, for anyone less familiar with post-IPO accounting, that's basically a non-cash adjustment. It just reflects the changing value of their warrants. Standard stuff, but it looks messy. They also had some one-time costs from paying off a loan and other IPO expenses.
So it's mostly accounting noise, not really affecting day-to-day operations or their cash position long-term.
Precisely. The free cash flow burn, though.
Yeah.
That is absolutely real. It was negative 62 million for the quarter.
Oof.
That's cash walking out the door. It reflects the just the intense pace of R&D investment. They're prepaying for Blue Ghost lunar hardware. They're accelerating the new Eclipse rocket.
A $62 million cash burn would normally send investors running for the hills. So why is the market just shrugging it off?
2 words: balance sheet. Post-IPO, the company is sitting on almost $1 billion. 996 million in cash and equivalents.
Fortress.
Management calls it a fortress-like balance sheet. And they're right. I mean, if you roughly annualize that 62 million burn, and it's not perfectly linear, but still, they've got enough cash for 4, maybe 5 years of runway at this rate.
That buys them a lot of time.
It buys them the time they need to aggressively build their vehicles and turn that huge backlog into real, sustained revenue.
And speaking of that backlog, that's the cornerstone of all this future confidence, isn't it?
It is. It stands at $1.3 billion. That covers launch, lunar missions, orbital platforms. It validates the whole strategy. And most importantly, it gives credibility to that new guidance. These are contracts they've already signed, not just hopeful projections.
Okay, let's pivot hard. Because the numbers are one thing, but the strategic move that truly ignited this rally was the SciTec acquisition, confirmed this quarter. An $855 million cash and stock deal. That is a massive chunk of change for a company that, hasn't even hit a consistent launch cadence yet.
It is. But the financial engineering behind it was pretty smart. They paid the $300 million cash portion without really touching that billion-dollar cash fortress.
How'd they manage that?
They upsized their revolving credit facility from $125 million up to $260 million. It let them deploy capital for the acquisition while keeping their cash on hand for operational needs, like building more Alpha rockets.
But I have to push back a little. They spent nearly $1 billion on a software company when their entire investment thesis hangs on the reliability of a rocket that just had a failure on the test stand. Isn't that an incredible, almost reckless bet on future synergy?
That's the key risk, no doubt. But the market is looking at this as the move that transitions them from just a hardware provider, which is a risky commodity business, to a high-margin, vertically integrated defense contractor.
So what does SciTec actually bring to the table?
It brings about $170 million in its own backlog, for one. It brings AI-enabled defense software, big data processing, and this is critical classified facilities and access.
Right, the CEO used that great analogy. Firefly builds the hardware smartphone with Alpha and Blue Ghost, and SciTec provides the software apps.
And that analogy gives you the whole roadmap for where the valuation is going. They're not just selling a ride to space anymore. They're selling the whole end-to-end system. The logistics, the software, the data processing, the classified security layer.
Which pushes them into a whole different category.
Instantly. They're now in the higher multiple defense segment, competing with the big primes for certain programs.
And the biggest program of all, the one driving this, is that massive multi-$100 billion Golden Dome missile defense initiative.
Exactly. Golden Dome is the prize. And Firefly now has 3 ways to attack it. They can effectively close the entire fire control loop. First, you've got launch. Alpha can launch the targets and hypersonic test vehicles needed for development.
Second, space. The Elytra spacecraft can be used as a maneuverable interceptor.
Right. But the true game changer, the part that only works because of this acquisition, is prong number 3.
Software and ground.
That's it. SciTec provides the ground processing, the fire control elements, the classified software analytics you need to track threats and make real-time decisions. They can now bid on the whole integrated system, not just the parts.
And the people, too. The human capital.
A huge piece of it. They got over 1,300 employees, 90% of whom hold security clearances. We're talking PhDs and specialized software developers. That immediately gives them a defense footprint they just couldn't have built on their own.
Okay, so the strategy is compelling, but a strategy is worthless without execution. We have to tackle the elephant in the room, the Alpha launch setback. A ground test destroyed a first-stage booster. That's what hammered the stock previously.
It did. And management's communication here was, I think, crucial for this rally. They were very clear. They said the root cause was a process error.
A process error, not a design flaw.
Exactly. Specifically, hydrocarbon contamination during integration. They were emphatic that it was not a fundamental flaw with the Alpha rocket structure or its engines.
That distinction is everything. A process error you can fix with quality control. A design flaw means you're back to the drawing board. So what did they actually do to convince the market this won't happen again?
Well, they had a full quality stand-down day. They put in stricter fluid system inspections. They enhanced the sensors on the first stage. And they added automated abort logic to the test software.
Meaning the computer is smarter about shutting things down if it detects a problem.
Right. So now the return to flight for Flight 7 is targeted for late Q4 this year, or maybe early Q1 of 2026. And they'll use the next booster off the line.
And they made it clear this delay does not affect the timeline for the bigger Eclipse rocket.
Correct. They're keeping those programs separate. But, it wasn't all about fixing problems. We saw some excellent operational wins on the spacecraft side, which is already bringing in cash.
Yes, the lunar data monetization. I thought that was fascinating.
It's a landmark deal, a $10 million contract add-on from NASA, just for selling additional lunar data that they're collecting during the first Blue Ghost mission.
So this proves the business model.
It proves that lunar data, for future mobility for infrastructure, is a monetizable asset today. It's not some far-off dream.
And the future missions look solid, too.
Very solid. Blue Ghost Mission 2 is moving ahead for a launch next year. That's a huge one. It's going to be the first U.S. lander to attempt a far-side landing, and it'll deploy a rover for the UAE. And then they got the big $176.7 million award for Blue Ghost Mission 4.
Wow.
That really cements their role in NASA's whole CLPS lunar program.
And they're also looking beyond U.S. soil for launch sites.
That feasibility study to launch Alpha from Hokkaido Spaceport in Japan is strategically brilliant. It's not just diversification. It gives them launch resiliency, critical site outside the U.S., and it plugs them directly into that massive Asian satellite industry.
Let's tie this back to the market then. We talked about the rally, but you have to put it in context of the pain that stock has seen. It was down, 74% since the IPO?
And down 35% in just the prior month. The volatility has been brutal. Investors had priced in just massive skepticism.
So the valuation reflects this dilemma. You've got proven lunar contracts and a huge backlog on one side.
But on the other, you're totally dependent on clearing this binary execution risk. Alpha's return to flight, all while you're burning through a ton of cash.
So why the sudden optimism? Is it just the guidance in SciTec, or are there broader sector tailwinds helping them out?
It's definitely a mix. The sector tailwinds are strong. The aerospace and defense index has been crushing the broader market for the past year. Government spending is surging in the two areas Firefly is targeted perfectly. NASA's lunar programs and national security, especially Golden Dome.
The market sees them as perfectly positioned.
They see Firefly as ready to catch that spending wave, which is why sell-side sentiment is still overwhelmingly bullish.
Right, the analyst ratings.
They're almost all buy ratings, with an average price target around $55. That suggests they see, 200% upside from here, if they can execute?
That's a big if. So let's talk about the lingering risks. What could still derail this whole story?
Well, there are three big ones that haven't gone away. First, you've got the ongoing legal investigations about pre-IPO disclosures.
Yeah.
That's an overhang, adds uncertainty.
Okay.
Second, the R&D and integration spend is going to keep them in the red for a while, so investors need to stay patient. And third, and this is the big one, everything hinges on Alpha Flight 7. One more failure, even a process-driven one, could just destroy the narrative and wipe out all these recent gains.
Okay, so we have to remind you, our listener, that nothing we discuss here is financial advice. We're just analyzing the data and the market mechanics. But given the high volatility, that huge analyst target, and this critical upcoming catalyst, this company has a fascinating setup for a potential options play.
I agree. It's almost the perfect setup. You have this binary make-or-break catalyst, the Flight 7 launch in late Q4 or early Q1, and a stock that historically swings 20% on a good day. So you could frame what I'd call a volatility and validation spread bet.
A volatility and validation spread. Okay, walk us through the thesis on that one. It sounds aggressive.
The thesis is simple. There's a giant gap between where the stock is now and that $55 consensus target. And that gap can only be closed by one thing: a successful flight in early 2026 that validates Alpha's reliability.
So how you play that?
The core of the strategy would be to go long on call options, beat it well after that Q1 launch window, maybe June 2026 or even later. This is your bet on the massive upside if the flight is a success and the stock starts climbing toward that analyst target.
But that long call is an expensive, high-risk bet on a single event. How do you hedge that?
That's the other side of the spread. You simultaneously short the stock or, more likely, buy some near-term put options, say expiring in December, right in the middle of the holiday and integration season.
So you're betting on some short-term weakness or jitters before the launch?
Exactly. You're betting on a little temporary weakness, maybe a slight delay, as they do all those new inspections. That tactical short position, or the premium you get from selling those puts, helps pay for the long-dated calls. So the whole trade is designed to capture the huge long-term potential while hedging against the immediate operational risk of the next few weeks.
So wrapping up this deep dive, Firefly delivered impressive revenue and a huge guidance lift for 2025. The crucial move was buying SciTec, which cements their story as a full-spectrum space and defense contractor. And critically, they managed to convince the market that the Alpha launch risk was just a correctable process error, not a fatal design flaw.
The market's reaction suggests investors have decisively shifted their focus. They're prioritizing that $1.3 billion backlog and the billion-dollar balance sheet over the cash burn and the legal issues. But the key question for you, the investor, over the next few quarters is this: are the fixes, the stricter inspections, the new software, are they enough to establish the reliability they need to justify this high-growth, high-burn model before that billion-dollar runway starts to run out and investor patience finally wears thin?
It is a phenomenal story to track in the space sector. We will be watching that Alpha Flight 7 timeline very closely. Thanks for diving deep with us today.